Time Inc., meanwhile, the magazine unit that's home to People, Sports Illustrated, and Time Magazine, was spun off from parent company Time Warner today. Shares of Time also made their market debut on the New York Stock Exchange today. Time Inc.'s chief executive, Joe Rip, sounded upbeat about his company's prospects, despite an industry that's been stung by declining circulation and advertising revenue.
I've got some of the most trusted brands in the United States. 9 of my brands have been around for over 40 years. In fact, one of my brands is the oldest living, continuously published magazine in the world called The Field. I've got a great marketing machine that I can work. I've got strong cash flows. And to write off a company like that, I look at it as incredible. I mean, this company has great assets.
Investors didn't seem to have the same level of enthusiasm. Shares of Time fell nearly 1% on their first day of trading.
So can Time Inc. go it alone as a separate company? Porter Bibb thinks so. He's a media analyst and managing director at Media Tech Capital Partners. Porter, welcome. Good to have you with us. I should point out that both Susie and I spent some time at Time Incorporated, so we know the company at least reasonably well and have, by and large, fond feelings for it. Are you as enthusiastic as Joe Rip is?
I am, and I think Joe Rip is the right guy at this time to steer that ship, because what Time Inc. is a content company. It's not a magazine company. It's got, as Mr. Rip mentioned, it's got some of the 90 magazines that are some of the most iconic brands in the communications and entertainment business, finance, home furnishings, self-help. And one of the, you mentioned the Field magazine, that's part of their UK IPC media group. That magazine started in 1799, so they've got a little bit of a history, and they're actually not a bad survivor.
Well, as Tyler said, we do have fond feelings for it, but let's look at some of the facts. Advertising is down, circulation is down. The magazine business, we know, is an industry in decline. How exposed is Time?
Well, first of all, Susie, I think that I'm confused as to why Jeff Bewkes and Time Warner decided to spin Time Inc. off as a public company, because they had an option. They tried to sell it to Meredith and put it on the market for about 3 or 4 years, and there were no takers. But one of the things that they could have done that would have, I think, really put Time Inc. on a high plane was to create an ESOP, an employee stock owner company, because right now the people who are running Time Inc. and all of the magazines are suffering from the fact that they've had to, for decades, had to give all their profits back to Time Warner. They've never had any real capital to grow or to develop. They haven't really made a successful transition to the digital media. And they've still got these great brands. The one thing I don't agree with Joe Rip about is he is meeting every day with the editors and saying that they've got to cut back 25% of their editorial staff. Well, that's the guts of this business. It's a content creation business.
But Porter, are those brands as valuable as they once were? You have a brand like People magazine, but there are competitors out there nibbling at People in a way that it hasn't happened before, whether it's TMZ or Sports Illustrated. Not as valuable or dominant in its space as it was in the digital era.
Well, no, you're absolutely right. The whole media business has fragmented beyond imagination. But the brands, what people are looking for is A, something they recognize, B, something that brings value or pleasure or some entertainment to them, and C, they want to see something that's accessible.
Right.
Time Inc.'s titles are not accessible right now in the digital domain.
Yeah, even though the Time app on my iPad is pretty doggone good, and ditto the Sports Illustrated. Very quickly, would you buy the stock at this price?
I think it's a steal. It's 8 times PE. It's the same market cap as the New York Times. The New York Times makes a quarter of the profit that Time Inc. makes.
All right.
And I think if you're patient and wait, you're going to see a real, I think it's going to be taken over.
All right. Porter, thanks very much. Porter Bibb with Media Tech Capital Partners.